Hello, everyone, and welcome back to another exciting AdvisorShares AlphaNooner. Today, we're excited to welcome a new face. We have Peter Richiutti, who is the professor at the Tulane A.B. Freeman School of Business and the director of the Burke and Road Report. Excited to spend some time getting his insight in terms of what is going on in the market today, getting some insight in these under-hidden names in the small cap space of investing. Excited to dig into him and get his insights and views overall. So if you're joining, one, appreciate it as always. Thanks for making the time. And two, if you have any comments, questions, Peter's got some great insights, so take advantage of that. Throw your comments in the chat as we go along. With all that said and out of the way, Peter, thanks so much for joining. Really appreciate it, of course. Would love to start just with you I know we have like sort of your high level insight, but would love to start with kind of your background before we dive in a little deeper.
Well, first of all, happy Mardi Gras. And the parades have begun to roll. I'm originally from Boston, and I was with the investment firm of Kidder Peabody. Went to Babson College up in Massachusetts and moved down here 42 years ago. And I've been teaching finance at Tulane for the last 40 years, which is a long period of time. We love it. I started a program that there was no student advised situation like this anywhere. Like a lot of professors have classes where they took $500,000 from endowment and they manage it and such, but we're doing sell side research. We have I have 100 students each semester, and they're broken up into teams of 5, and they've 20 for each semester, and they have to write an investment research report on this company, a small company, underfollowed, headquartered in the South, so Texas, Louisiana, Mississippi, Alabama, Georgia, and Florida. And that's where we think the real opportunities are. You're a long way from Wall Street. Nobody's visited these people in a long time. We get there and I've seen signs, welcome Burke and Road analysts. And back in the office, it's like, Bob, get the donuts. They're almost here, So, and we fly them out to spend the day with the CEO and the CFO. And so we've had the best field trips in the free world. We've taken helicopters to offshore oil rigs and steel mills and chicken processing plants. If you've never been to a chicken processing plant, do take the family. That is a nice outing. And I take a lot of abuse for that last one, but after a couple of years of therapy, these kids are fine, and that's what's important. So
that's awesome. I feel like having that real hands-on approach and experience makes a huge difference. Really doing the actual work that you're studying and putting it into practice and application, hugely important. I'm sure a lot of great memories too, like you're saying, to kind of dig into some of these companies. I would love to kind of chat a little bit about, why focusing in on these small companies. Is it basically access? Is it, what's sort of the story there in terms of finding these kind of more hidden gems?
Well, I think so many university programs are, an alum is just helping out this old school and all that. But this is a win-win. These are people that need coverage. They need to tell their story to Wall Street, and we need the experiential learning. So a few years ago, we were named had the #1 experiential learning program in the world. So it works for both sides. And I think the smaller companies, I was talking to somebody that wanted to do this at a university, and he said, well, we would follow Apple and Microsoft. I was thinking that's what they need, an 85th analyst. We're the only ones there. And I think the big thing, Mackenzie, is that this generation particularly, they think stocks are just ticker symbols. And they get out there and there's Alice, the CEO, and Bob, the CFO, and it kind of blows their mind. And I think that pays off a lot. And we're long-term investors. We write investment research reports that you can get at burkeandroad.org. That's all free. And so, for instance, I remember once I had in the first class, I said that you're going to have to come up with a 12-month target price for this stock. And the kid comes up to me at the end and he says, 12 months, Professor Richiutti, that's like 4 girlfriends from now.
Oh, no.
It's like, Jonathan, I don't need to know about your personal life. I need a number on the first page. So it's they're great. This I've talked for a long time, Mackenzie, and this is the best bunch I've ever had. I think there's this feeling by baby boomers, and I'm a kind of a young boomer, that these kids are living in their parents' basement and saving up for a new tattoo. These are the sharpest people. And that the other thing is that they, we have mandatory community service at Tulane ever since Katrina, and they love it. I think it's one of the reasons they come. We average about 47,000 applicants for 1,800 freshman slots. And big reason is the community, the community service.
Yeah, no, that's really important to tie all those aspects together. And I guess that also, I imagine, ties into sort of looking in those southern states, those areas I think that are a little less underappreciated or a little more underappreciated in terms of finding investment opportunities there. So I think that's an extra layer of also really, investing in those areas is important. Yeah, I think that's just fantastic to hear. Sounds like, I feel like what has been the focus so far this year in terms of looking at the names that you guys have kind of come up and tracked and followed?
We've always had a little question, at least, about sustainability. So we've kept that. We think that's important. But the real thing is now there's a section in every report saying, how is AI going to change your company? And the thing is, they're not all that obvious. I mean, we're not following NVIDIA. We're following companies that are they it might be behind. You don't see it ordinarily, and I think that's the big thing. They're kind of secret stories, and that is why the market is climbing this wall of worry. You think to yourself, there's so much to be upset about here, and the market keeps going up and up. And what it is earnings estimates keep soaring, and it's because your cost basis is going to drop dramatically. And remember, the stock market isn't an indicator of the economy. It's an indicator of corporate profits. This is what it's always been, and that's what people are looking at.
Yeah, no, really interesting. Out of curiosity, just because you've been doing this for so long now, multiple decades, have there been any sort of trends or patterns, lessons that you've kind of taken out, or the students have kind of commonly taken out as you've been kind of running these trials?
I'll tell you, it is the fact that they're in the very beginning when we started, they didn't know quite what questions to ask and really what kind of tone to ask. And now we've had, oh God, first semester we had 4 managers of a company write in on LinkedIn that these were the smartest people I've ever seen, even on Wall Street. So that's changing because it's kind of intimidating to, and particularly to ask the difficult questions. And I always like to start out with something that students think is kind of dumb, but I ask, what keeps you up at night? And half those questions you have on the sheet of paper are coming out. And, so it's interesting like that. And I always tell them you'd be better off to play not so smart in a way, because if you come in as kind of humble, you're going to get answers. And, as opposed to, I had an internship at Goldman Sachs last week, it's like, that's not helping me. I got to go the other way. And, no, we've never had a company that wasn't great to work with. And the most amazing thing, Mackenzie, is it's our 33rd year, and we've had 68 of our companies get bought out.
Wow.
And the average buyout is about somewhere between 35%. So shareholders of these companies really do very, very well. And,
yeah, that's really interesting. I wonder if it's sort of the same kind of parallel with you're saying students have to have sort of a humility and sort of really not kind of get overconfident in things. I think that can be true also with some of those smaller companies. Ultimately, I feel like there's a lot more that they have to kind of prove. They're not NVIDIA that's kind of coasting maybe on this sort of hype and just sort of general appeal. So I think that makes sense. And I think it's probably very, very helpful, insightful to be able to really dig into how a company works, really see kind of those shares as part of a company, which is what they are, rather than kind of just, like you're saying, letters ultimately to kind of trade around. And kind of, I think that has become more popular in terms of just sort of the culture around trading. I know there's been much more engagement, participation in the stock market, which can be good. But I think it is that importance of, recognizing you're ultimately owning a piece of a company.
Don't get me wrong. These students are, when they're not in that classroom, or a lot of them are buying crypto or day trading or whatever, but this is the class where, I'm sorry, we're going to do long-term investing. And they really understand things at that point. I bring in a lot of speakers that had graduated in the past, and that's great because I'm old, and these people are under 30. It's like, let's believe them.
Yeah,
So,
you need a balance of perspectives. I think that's helpful because I think it is helpful to be able to, we were talking about this earlier in the pre-show, I think to be able to have that experience, to have seen the market over different environments. I think a lot of people look at kind of where we are currently in the macro and say, we're in somewhere that we've never seen before and it's entirely new, entirely different. I think there are kind of echoes of the past in it, although it is, I think, different in some ways. But I think it is helpful to kind of marry up those perspectives of newer perspectives, but also someone who's, seen history ultimately is important. So maybe kind of turning more to that, you were kind of hinting at some of the macro. Would love to get a sense of kind of how that, what you're seeing there and how that kind of ties into the small cap side of things, just from, the current market environment.
Well, a couple of things. One is in terms of these students basically have never seen a down market. I wasn't here for 1929, but I was for a lot of them, 87,
Sure.
09 and such. And the other thing that's really helping us um, is that there's fewer and fewer small cap analysts out there. So there's a lot of companies that have no coverage whatsoever. And not saying they have to say yes, but it's be in their best interest. We were visiting a company called Bayou Steel once, and it was a great story. And one of the students asked kind of innocently, "Have you ever tried to tell this story to Wall Street?" And the CFO just put his forehead on the desk. It's like 1,000 times, but nobody's interested.
Yeah, that's fair enough. It reminds me that I feel like there was that meme going around earlier of someone, I think it was an intern, saying, "Have we considered, increasing profits and reducing expenses?" I think, yes, of course you want coverage. Of course you want, Wall Street to be picking up on this stuff. But yeah, ultimately it is difficult to do. And I don't know if you have a perspective on, there are fewer analysts that are out there. It's more competitive and kind of more analysts, each analyst has to cover more, and that kind of shrinks what they're able to do, or, what the trend is there. Because it does.
Lost in the sauce. Yeah.
Yeah.
And then the other thing is we had an alum, about 35, come in last night and was talking about, if you want to get into these firms, and we've sent 1,100 students off to Wall Street, but you're going to have to work harder and have a different approach to things, because those early jobs are being eliminated. The grunt work. So I scared him a little bit. I guess what scared him is that he gets up at 4 a.m. This guy, I think those students were just passed out. I had to wake him up at the end.
They're going to bed at 4 a.m. rather than waking up. Yeah, no, that makes sense.
Right. Yeah.
That is wild. Yeah, I think that is, separate of kind of the investment side of things. Interesting to hear from a teacher perspective, a professor perspective, in terms of how you're gearing up your students to be prepared in kind of the current job market environment. I know there's so much talk about AI and using those tools, but there isn't, competition seems more and more intense than it has ever been. Do you find that to be true in terms of prepping the students? It seems like
oh yeah. But the job market, one of the reasons we do so well is that you get the first bunch in these good firms, and then after a couple of years, they throw the rope back over to the current students, and that really, really helps, and because these firms are going to fewer and fewer schools now, they want to focus, and so we still get in the door, and we still have people that have been enormously successful, and I agree with what you just said. It's and watching people, like we have a conference, I guess I could talk about that, is on April 24th here at the Westin Hotel in New Orleans, our 29th annual conference. And the companies we've written on, most of them come to speak at the conference. And the average person does not get to see the CEO and CFO of a company. It's a very different experience. And one of the reasons I love the conference is it's very democratic. We have people that are, have $10 billion out of under management. They're on the West Coast. And then we have like one of the companies we used to follow and got bought out was Piccadilly Cafeterias, one of the last cafeterias out there. And I was in line at the Q&A session. The first person asked about revenue going forward. And the next person asked, "Why don't you have this carrot souffle at the Jefferson store anymore?" And I thought, they're both very valid questions. So that's kind of, I get a big kick out of all this.
That's fantastic. Yeah, I do want to talk more about that, because I think it sounds super interesting. Would be curious to hear. I don't know if you can kind of tease any of the companies that are coming in particular, this year. Would love to kind of hear. But yeah, I'd imagine in terms of finding those jobs and setting up yourself best for those opportunities, I'm sure obviously the name brand recognition of Tulane makes a difference. But also I do think, running a program like you're running, where you are getting your, hands really deep in it, and you're really kind of, building that experience in a real practical way, also makes a difference. So that's fair. But yeah, would love to hear, can you tease anything in terms of who's coming?
We have our keynote speaker is Arvind Sanger from Geosphere. And we brought him in there because we're very proud of him as an alum, but also he focuses on a wider look at the macro, and then the rest of it is kind of right in there. We have this is the first year, for instance, we've had someone speak on how to be a better investor through AI, and that's the first time we've done that, and I'm looking forward to it. Then we also have, just on the side, we have a kind of private equity for me and you. It's tough sometimes, these people that do it for a living, to pull them back to, so that the audience is very varied. It's a very difficult thing to do. I've given 1,500 speeches around the country in 47 states. So I think it's kind of cheating. I kind of know when we have lost them and all of that. But And then over time, we've had one company you'll see is a company we picked up 30 years ago. And it's a good example of boring is beautiful. I hand these students these companies, and they're so disappointed. It's but when we first started out, I picked up a company that's across Lake Pontchartrain here, and it was Pool Corporation, and what they do is they wholesale swimming pool equipment, and that's like you just want to put your head down and run away. But that stock's gone from in those 30 years gone from 65 cents, and it got up to a little over $500.
Wow.
And it's a long period of time. You had to stick with it, and it sounds super boring. I remember the first time I visited with them, I had the founder, and I said, I was writing down my own notes. I said, "Do you wholesale ladders?" He goes, "Yes." I said, "Do you wholesale kickboards?" He said, "Yes." I said, "Do you wholesale chlorine?" And he says, "Peter, we have 30,000 products. We can't do the interview this way."
10,000 a clip.
Yeah.
Yeah, that's what I definitely agree. I think not boring, but sort of the unsexy names. I think a lot of people don't want to pay attention to them because they do want to kind of chase hot tech, whatever, sort of the AI, of course, anything that's sort of exciting and grabbing headlines. But I do think it comes down to, I think, a lot of the same thing that you're kind of tapping into, which is the companies that are able to support in a very, maybe boring way, but in an important way, support a lot of the industries, support a lot of the, companies, people's way of living ultimately in a way that you might not see so obviously. But, it makes a difference, like you're saying, over time. I think that's super important. We talk about that actually a lot. We have a portfolio strategist, Eddie Elfenbein, who he tracks just sort of those similar hidden gem kind of vibes. And I think, it pays off over time. It does bear repeating in terms of trying to make people get excited about these names. But, I think it's worth doing ultimately.
These aren't little names that are, flying around on the outside. These people lead their industry.
Mhm.
It's just that you never hear the industry because you're not on the next side. But and then the other thing you hear all the time is that, oh, these are penny stocks when they don't know about the program. And it's really between 200 million and 2 billion. And everybody wants to focus on the bigger ones than that. So
Yeah, no, that's true. I guess, yeah, that's a great point. Well, I'm glad that he's coming. And it's great to see. I think that relationship really last over a long time. I'm sure he's thrilled to come back. If you're saying it went from a few cents, tens of cents, ultimately to $500, that's got to be a great story.
and
Out of curiosity, how much does sort of the impact of the program kind of boost the profile, boost the awareness of these companies to kind of draw in, extra opportunity?
what it does is they now have a report that they can go to a bank with. They can go to UBS with, and you're not starting from zero. And then they haven't heard of these names. I always kid around with my students. I said, when you're being interviewed, now you've got a resume and this 30-page, very detailed report. And I say, and if that woman interviewing you knows more about chicken processing than you've done something terrible. That's something.
You've not
5 students.
Yes, no, that's true. Yeah, being really knowledgeable about a certain area is important. But I love, again, like you were saying at the beginning, I think it's a very win-win sort of situation in terms of the program, being able to produce this, elevate a company that is doing well, and prepare a student to be, really available to jump into the work world, which I think is great. Out of curiosity, in terms of this year, have there been any trends that have emerged in terms of the types of companies that have been more successful, ones that have kind of struggled? Just out of curiosity, there's always a range, I'd imagine.
Yeah, there is. And one of the things is that banks have come back. We'd always had about 15% of the portfolio in banks, and it's interesting because that industry had really been kind of used the term uninvestable, and yet they're coming back. We had Mackenzie, we had a mutual fund, and nobody does sell side research, and then we came up with a mutual fund, and nobody did that. I had to get the attorneys at Tulane to put the gun back in the drawer when we first coming up with that. But it traded publicly under HHBUX, and it ended a couple of years ago because Hancock Bank, that handled the transactions, didn't want to be in the mutual fund business anymore. But it was open 20 years, and it outperformed 82% of the nation's stock mutual funds. And because we were there where nobody else was, and it seemed like a couple of companies were getting bought out every year. And I talked to the portfolio managers not long ago, and they said that they miss doing that fund more than any other funds. And they said that they have the portfolio they left it with on the corner of like the Bloomberg, and it just makes them angry every day.
Angry. Okay. Sad, angry, same thing, that they wish it were still there. Oh, that's
Right.
really sweet. Yeah. Okay. Making an impact across the whole range of people that it touches, which is great to hear. I would imagine you're not going to look towards tokenizing anything, doing kind of the next gen of sort of a fund. Would you ever look at that now that the world, because kind of mutual funds, I feel like things move and now there's all this like tokenization talk. Would you?
It is. Every time an alum comes back and we have lunch, they say that, what the heck happened to the mutual fund? That was really a star part of it. And there's just not much money left in mutual funds. One of the things we are looking at, and we really haven't made any headway there either, is to turn it into an ETF, which
Interesting.
really could go. And because people ask me all the time, all those monies went to Federated, but now it's kind of lost to the sauce there. But
Yeah, that makes sense. Interesting. Okay, well then, so you mentioned financials kind of having some strength again. I'm imagining, just because you're focused on the South, that energy is a big part of the mix for you guys as well. What can you tell us about, how sort of things are shaping up this year on that front?
Well, it's like two different ends of it. There's natural gas and there's oil, and natural gas has a tremendous future. I mean, it's got all these facilities. They take up a lot of electricity. And that's the front end, the fuel for electricity. And so companies that are around there, for instance, we look at some banks that are not too far from the Meta facility, which will take 10 years to complete, but a ton of jobs. And all of a sudden they got pumped up. Like, these people are going to open accounts up there. So I'm always amazed. One of the things we try to show the students is that it's a chain and it keeps going. Obviously Meta, great company. But what about the ancillary parts, and that tends to be where the values are.
Yeah, no, very interesting. We've talked about that a lot in the past in terms of, the data centers and sort of the cooling that was required ultimately to support that. I'm sure there's a ton of other kind of inputs that are required. But yeah, definitely an interesting kind of trend there. All right, well, interesting. And then anything else that's sort of standing out in terms of, trends, anything so far, names even so far this year?
Yeah, the couple we like are Navigator Gas, which is that's NVGS. And you hear a lot about liquefied natural gas, but this is liquefied petroleum gas, and it has a lot of the same great characteristics. And so we think that they've got a long way to go. A couple of others we actually just picked up, haven't visited them yet, but a bank in Puerto Rico. Okay. And one of the reasons we're doing that is Bad Bunny. No, I'm only kidding. It's not that. No, that
That's amazing.
I'll fit it somewhere in the report. But it's that the Caribbean, Lord knows what's happening there in Venezuela and Colombia, all these things we're threatening. But Puerto Rico is America. And so we think they're going to get a way disproportionate of the financials that are really going to work out in here, whether it's more business that was being done in Colombia or Venezuela being done out of Puerto Rico. So we think we're going to start with a Zoom call. But if I talk the dean into it, we're flying to Puerto Rico.
That is amazing. I would say, I feel like if you're coming from Boston or here in DC, you'd want to be on that plane now, but you guys probably have some pretty fine weather in New Orleans, I feel like. But yes, still.
I just laugh because the students get great weather because they're coming in, September-ish, and then they're leaving in May, and then they leave me here to sweat. So it's my own fault. My cousins live in Cape Cod. I really ought to get out of here.
Well, what are you going to do? I can empathize on the heat and humidity. We definitely get that here in DC. Not as bad as you guys do, but yes, it is tough out there.
But people pay extra to get this kind. It's like a moisturizer.
Free sauna. Yeah, exactly right.
Every day.
That's true. Amazing. All right. Well, then I just wanted to also get kind of your perspective a little bit, just in terms of managing this, whether it is kind of trying to adjust to the macro framework as things adjust and move. It does feel like things have been a little bit more uncertain this year and the past year than maybe they have been in previous years, a little bit in terms of, how different industries are going to shake out, how different companies can navigate through. Anything in terms of what you're seeing or talking through with students in terms of navigating kind of the different policies and how they can adjust and adapt, how small caps maybe change against larger caps? What's sort of the thought on that side of things?
Yeah, one of the things that happens, I can't get up early enough in the morning to not have some missive from President Trump. I mean, I'll keep going earlier and earlier tonight until I can get that. But the companies come up right away as one of their risks is just, I don't know. And it's really difficult to do 3-5 year planning. I mean, in fact, you're doing it and you're thinking to yourself, I sat on the board of a company. I was like, it's a great exercise, but what is, I remember we were a healthcare company, and I remember talking to somebody about how we'd spent 3 days working on this thing. And he said, he says, oh, Peter, that pizza's still spinning. And I thought that was exactly the situation. And the same thing for investors. The key, if you look over long periods of time, the market goes basically up and to the right. And that's what you've got to hold on through these things. It's very difficult to be trading in and out of these things. But if you back up and you bought good companies at good prices, there's no reason you can't make quite a bit of money. One of the things I laugh at is that people like of all my accounts, the one that has done the best is my 401k plan, because I can't get at it or, without any trauma, and you leave it alone. And every quarter I'm like, whose 401k is this? So,
well, they always joke about, I think, not the best managers lose their password to their accounts and then they don't touch it for decades or something, that it can be true. But yeah, I imagine also just following sort of these smaller cap names, it probably not uniquely prepares you for kind of managing volatility and understanding that the general trend moves up and to the right, hopefully. But I think maybe is helpful in terms of having that mindset and instilling that mindset in students that short-term things are volatile, short-term it's uncertain, of course, but I'm sure still picking those areas of key elements of a company that make them succeed over time is the key.
They figure out how old I am when sometimes I'll allude to something. I say, well, you remember the crash of '87? It's like, I wasn't born and I have no idea what you're talking about.
But that's what we talk about. I think it's important to have that longer term view in history, just because I think you're right. A lot of students coming in, a lot of people who are investing in adults really haven't experienced a true long-term downturn. Obviously, COVID to some degree was a bit of a shock, but very V-shaped in terms of that recovery. Even what we've seen with the tariffs, I guess, last year, relatively kind of a flash in the pan, ultimately, in terms of how things have moved.
That's what I was going to mention to you. For instance, they've really never been through anything. And I would say, this is all students, Harvard, wherever you're going, is you're almost starting off at less than zero, because they have to unlearn what they've come, which is basically, do you ever had a worse conversation than talk to a 15-year-old about crypto? It's like, oh, make it stop, and so you got to get them back to zero and of course they're very, very smart. It's just that this is what they saw.
Yeah, no, that's true. I mean, I feel like either way, it's got to be tough. I'm sure if you were, teaching around students that were coming out of or in the middle of 2008, 2009, I'm sure you come with your own sort of biases that need to be unwound, that this is not always going to happen. It's not always going to be like this every year. So I'm sure, either way. But no, I've not spoken to younger people about crypto. I'm sure people are fanatic.
No, really. There's a skip that part.
Okay, fair enough. We'll pass on that. Okay, well, that sounds good. Okay, well then, I feel like as we're kind of winding down, any sort of final thoughts on the program, how you're seeing small caps, anything there? And then I did just want to get, again, a reminder for the conference upcoming, how people can kind of get involved, stay tuned, and all of that, of course.
April 24th, and that's actually the same weekend as Jazz Fest, which is like cheating, really. Awesome. And we're downtown at the Westin Hotel, and it's free. And we usually get about 400 or 500 people that come, and I think everybody has a good time. There's one other thing I wanted to mention about small caps. I mentioned that there aren't as many people following them. And corporations, if you're an investment banker in New York, you're not going to pay somebody $500,000 to go visit a company deep in the bayou. I mean, because maybe they're not going to do a bond offering or a stock offering for a long, long time. That's not going to pay off. There isn't enough volume in the stock. But the last point is, most of the time, the management owns a ton of stock, and the other part is that they're really not as tied to tariffs as these big companies, and I think that's helping out a lot.
Yeah, that's an important element to point out. Okay, well, that's fantastic. Again, I think can't beat it on the conference side. Definitely find more information, and if you're in the area, check it out. Jazz Fest is also a great bonus as well. If you were pointing anyone, because you've been there for so long, anyone to like a restaurant spot to eat, anything as well? Any thoughts?
Well, you can register at birkenroad.org, but I think there's 600 restaurants in New Orleans. And, I will give one, though, that I like a lot. I'm not promoting them or anything, but it's a Ye Olde College Inn. And I think it has the best seafood in the city. And it's just a little bit out of the city, kind of where I am, but about 5 miles or so. And there's another place called Krabby Jack's. And that's and that's terrific. So I think all of them are great. One of the things you see in New Orleans is if you're not great, I'm not going to say anything bad, but like Red Lobster or something like that, they almost immediately go out of business.
Market forces, I think, prove true on the restaurant side of things as well. That makes sense.
Restaurants aren't going to make it, so.
Fair enough. That's how it goes. All right. Well, fantastic. Again, Peter, fantastic to spend some time with you. Really appreciate the insight, some great, interesting programs, and I think just really a different perspective on the market that we've had in the past. So really appreciate you taking the time. Again, I will point everyone to check out that conference. That sounds fantastic. With all that said, thanks so much, Peter. Appreciate it. And we'll catch you next time.
Thank you,
so
Mackenzie.
Before investing, carefully consider the investment objectives, risks, charges, and expenses found in the prospectus, available at AdvisorShares.com.